Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on SPY IWM and QQQ. So after the FOMC reaction, initially bullish in the first 10 minutes, and then the bears took over, but the bulls bought the dip by the end of the day. So we have a lower wick holding exponential support, yet again keeping the bulls in full control. Could be shaping up here for a potential ascending triangle pattern with a horizontal resistance line where we have a clear little double top. It was a lower high by 14 cents. Obviously not significant, but a horizontal resistance line and a higher low pattern heading up to that horizontal resistance line. So the range is tightening a bit. We have our low of 241.95, higher low of 243.29, and we do have some bearish action after hours. I personally don't pay attention to after hours. I wake up early enough that I'm looking at the pre-market action, and I always can catch up, and it gives me all the information that I need. And really, I find just looking at after hours a waste of time because I'm not trading after hours. So I catch up in the morning and save that time. So what we're looking at is this new support, the low of today, 243.29, and really it's going to require a break of 241.95 in order for the momentum to shift on the daily time frame back to the bears. And I shouldn't even say back to the bears because it hasn't been with the bears for so long. But that would give us a little bit of a lower high and then a lower low on this consolidation. Middle Bollinger Band support is going to be right there as well over the next coming days. So pretty much it would require some significant bearish action to lose that level, lose the Middle Bollinger Band, see a bearish MACD cross, and have the bears finally take over in the short term. The weekly time frame is all bull. There is no bearish action here, no red flags. If I were long and looking at this chart, I would have no concerns and I'd go on my merry way. IWM on the daily time frame, we have a lower high here as well, and it's a little bit of a lower high, lower low, not significant because we are still holding exponential supports, but I'm looking at the all-time high, the little pullback, a lower high yesterday, 142.31, and now a little lower low. Support is 140.45. If we break that level, there's a decent amount of downside potential because the next support is all the way down at 137.81. Middle Bollinger Band is trying to catch up. That's in the mid 138s to be watching. But if we do break the low of today, there is some potential for some decent short-term downside because we have this space right here where we don't really have much support. So weekly time frame for IWM, that's not the weekly. Let's switch it over real quick. So weekly time frame for IWM, same story with no bears anywhere to be found really. Just sideways, healthy consolidation, small range, and on the verge of a bullish MACD cross. That upper Bollinger Band, we did close above it, but we are now back below it, 141.60. Ideally for the bulls, they will close over that level to remain in breakout mode because we have been struggling at this upper Bollinger Band resistance in the recent past. But really, it's not required for the bulls to maintain full control. As long as they're above exponential support levels and right on the verge of that all-time high, all it takes is one good day for IWM bulls to see a new all-time high. Checking in on QQQ, and we have the rejection from the middle Bollinger Band resistance. So we have our all-out dump, the low of the bounce, or the low of the dump has been set. The high of the bounce has now been set, in my opinion, as we have rejected from the daily middle Bollinger Band 2 days in a row, and the exponential resistance is lining up there as well. So those exponential resistances are dropping rapidly, and if we cannot close over those levels sometime in the next 2 days, it is going to drive the price back down. 138.62, 137.47 key supports. The low of Monday is a very important support for a lot of these tech names, individual and the sector as a whole. If we break those levels, we have a lower high and a lower low. The equilibrium pattern that is most likely to form after this volume and volatility dictates that we will see a low, a lower high, and then a higher low. There is potential that this is our higher low because the bulls did show up and buy that dip. Pretty much bears want to see a break of these lows, the low of today and the low of Monday, and the bulls want to see the middle Bollinger Band become support in order to be looking back up towards that all-time high. I am having a bearish lean here on this tech sector for a couple of reasons. Number one, obviously it's been so strong for so long since the election, but we're seeing this market hold up just fine. The market's not consolidating at all. So we're seeing a sector rotation where money's coming out of the tech sector, it's going into the financial sector, it's going into other sectors, keeping the market propped up. So if we were to see the market start to consolidate now, that would only be further downside here on QQQ. And that would, in my opinion, in the tech sector, would lead to a short-term shift in that trend. The weekly time frame here for QQQ has held exponential support for all of 2017. If we were to close below the 8 period here, 138.77, which is still a possibility this week with 2 trading days left to go, that would be the first time this year. We can see the bearish MACD cross closing in. We would be looking at a potential bearish TCG cross closing in. Not really the case as of right now, but just something that the bulls are definitely keeping an eye on, because anything where you say first time in 2017, that brings your attention, perks your ears here, because the bulls have been so strong. The last thing they want to see is a change in momentum, and it is possible that that does begin to unfold. We're going to be watching very closely. It hasn't happened yet, but as of right now, the tech sector, a lower high and a lower low, would shift that daily chart to favor those bears in momentum. So I appreciate you watching. We'll be checking back in as always forever. Have a great night. See you tomorrow.